A lot of volatility is coming up to the stock market. Hyliion merger was complete. Uber got its London license back. Disney laying off employees. Nikola and General Motors deal was extended. So today I will talk about all that and more. So please smash that like button and subscribe since it really helps my channel out. When we think things couldn't get worse, then is when real things happen. Surprisingly, last week the S&P 500 ended up by 0.44%, the Dow Jones up by 1.29%, and the Nasdaq down by 1.84%. Stocks finished second straight quarter of big gains, continuing with a historic stock market recovery. Apparently, investors are bullish for the fourth quarter since it tends to be the best one for most industries, but are also concerned about the second virus wave. Also, investors are concerned about the elections coming up. According to these, investors are focusing on the outcome of the 2020 election between President Donald Trump and Democrat Joe Biden. Nearly 70% respondents said Trump will be better for the stock market, while 33% said Biden victory would boost equities. Investors say this mainly because Trump tends to be more pro-business, while some investors do not like Biden's plan to raise corporate taxes and tighten regulations. Democratic presidential nominee Joe Biden has proposed raising the corporate tax rate to 28% from 21%, imposing a new minimum tax on U.S. companies and increasing taxes on foreign income of many U.S.-based multinationals, among other plans. Together, the tax proposal would reduce expected earnings among companies in the S&P 500 by 9.2%, and the pain would be more acute in some sectors than others. Obviously, this is the type of concern and uncertainty that creates volatility in the market. Another huge uncertainty at the moment is that Trump got infected by the virus. Yesterday, he posted a video on Twitter letting people know that he was feeling much better, but apparently a person familiar with Trump's condition said that Mr. Trump's vitals over the last 24 hours were very concerning and the next 48 hours would be critical. We do have to take into consideration that according to these latest news, Trump might be going home on Monday, and that could be very good for the stock market. We will have to wait and see if he recovers perfectly and is able to go back to the office on Monday. My opinion on all this is that we can't do anything more than just wait and see what happens. As I said to the members in my group, my recommendation is to be patient and do not panic sell, because we are definitely going to see huge volatility in the market and maybe more downtrend than uptrend. Not only because the president has the virus, but also because elections are a month away, people are concerned about the second virus wave, plus we still do not have any new stimulus, and even though we have had an excellent recovery in the economy, US jobs gains slow as more layoffs become permanent. Talking about stimulus check, yesterday Trump urged Congress to pass a new virus stimulus. We all know that Republicans and Democrats have failed to give more money to the people in need, and a very weak September job report plus high amount of layoffs have increased the concern in people. In my opinion, it is long overdue and we should see any stimulus confirmation before elections. I do think that all this will continue affecting the stock market in the short term, but not that much in the long term. So now the merger between Hyliion and Tortoise Acquisition Corp is finally completed and the stock is officially trading until its new ticker symbol, HYLN. The thing is that the stock has been dropping, and on Friday, after it started trading on it under its new ticker symbol, it dropped more than 12%. So why is that happening? Well, in my opinion, it is because of two things. The first one could be because original investors were able to sell their shares after the merger. The other reason is mainly because of the hype about the merger is over and a lot of short-term investors or traders might be selling for profit. With time, I have learned that a lot of speculators or traders like to invest in this type of merger deal between a SPAC company and a company because of the hype, and even more if the other company is within the EV industry. We have seen it before in other stocks. Now, will this downtrend continue? As always, it is impossible to know, but there are lock-up periods that are going to expire and that could create a selling pressure. Now, Uber wins back its license to operate in London after years-long battle. The dispute in England stemmed from the refusal by London regulators last November to renew Uber's license to operate after finding widespread instances of unauthorized drivers using the app to pick up customers. Back at the time, at the moment of the allegations, Uber explained that they were able to solve the problem, but the London officials were not convinced at all and wanted to make sure that there was not going to be another issue with the platform or the software before accepting Uber to renew their license once again. Obviously, this is excellent for the company since it means more diversification for them, and also because London is one of Uber's biggest and most important markets globally. Still, both companies, Uber and Lyft, are seeking to have California voters weigh in on the matter using the state's ballot measure process, which allows the law to be passed, overturned, or amended by popular vote instead of by legislature. As said before, this is something that could affect both companies since California is one of the biggest, if not the biggest market for both companies, and leaving the state or starting to consider their drivers as employees instead of independent contractors would highly affect both companies' earnings. If this gets confirmed in California, then other states will like to do the same, and that would be really bad for both companies' earnings, even more right now that they are in the right path of profitability, even with the pandemic. This would send them back a few months or even years since their expenses would massively increase. Now, Disney to lay off 28,000 employees as Disneyland's reopening was unclear. As many of you may know, Disney was able to reopen some of their theme parks. Shanghai Disneyland opened in May, Disney World Orlando opened as well, but still they haven't been able to reopen Disneyland California, mainly because California government officials haven't allowed them to reopen. Because of that, they had to make the decision to lay off 28,000 employees, of which 67% are part-time employees. Also, Disneyland begged to be allowed to reopen through an online press conference about 2 weeks ago, but they haven't got to the green line yet. Now, Nikola stock has been down more than 64% since allegations against the company and sexual assault allegations against their founder, Trevor Milton, came out. After all that, last Tuesday, September 29th, General Motors decided to extend their talk on the $2 billion deal they were going to close with Nikola, which was supposed to close on Wednesday. The deal was supposed to give General Motors 11% stake in the company for supplying Nikola battery, fuel cell technologies, and producing the Nikola Badger. Now, this deal might change and we might see General Motors actually increasing their stake in the company instead of only getting 11%, since the valuation of the company has actually dropped more than 50 to 60% since they talked about the deal. I do have to say that I have never liked this company and received a lot of hate when I analyzed the company in a video, mainly because I was crazy because I was not investing in the next Tesla. That is what I mean when I say that there is a lot of hype around any company within the EV industry. As all of us have seen, Tesla went up more than 700% within a year. Now people expect that any other company within the EV industry will do the same. I'm not saying that it is not possible, but companies need to have something to back up that type of valuation growth. Tesla is a company that has been around for years and have been proving everything they can do, the technology that they have, and the innovative that they are as a company for years. On the other hand, Nikola is a company that went public this year without even selling one truck, without even having one truck. It doesn't make sense for me to invest in a company that has nothing. It would be a complete gamble, in my opinion. Last week, we had companies like PepsiCo reporting earnings. They reported that their sales grew more than 5% because of their snacks section. They reported earnings of $1.66 per share versus $1.49 per share expected, and reported a revenue of $18.09 billion. They announced that for the remaining of the year, they are expecting organic revenue growth of 4% and core earnings of $5.50 per share, which is down 0.38 cents from the original forecast. Next week, we have companies like Domino's, Levi's, and Paychex reporting earnings. First, Domino's. Analysts are expecting them to report a revenue growth of 15.20% for the quarter and 12.6% for the whole year. We have to take into consideration that Domino's is a company that has benefited from the pandemic mainly because of the stay-at-home orders. Even though the economy has reopened a lot in this last quarter, I do expect them to have excellent earnings because we still see a lot of people staying at home and ordering food online. So I expect Domino's to beat analysts' expectations for the quarter. Second company, Levi's. As any other retail company, it got hit really hard because of the pandemic, and it has not been able to recover to where it was before the pandemic. Even though they are doing very good with the e-commerce, analysts are expecting them to report a revenue drop of 47% year over year. The last company is Paychex. Paychex is a human resources and payroll services company here in the US that helps small and mid-sized businesses. It is also another stock that has not been able to recover from the drop in March, but it has been having an excellent performance. Analysts are expecting them to report a revenue decrease of 9.74% for the quarter and down 3.63% for the year. I would assume this is because a lot of companies have had to cut a lot of expenses during the pandemic and lay off a lot of employees that might have heavily affected Paychex revenue for the year. I hope you enjoyed this video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.